Okay, well, good morning, everyone, to another session at the FII Lab. Today we will be discussing venture capital, just a broad overview, but we also give another look into fundraising. We've done quick, surveying, but I just talked to a few people. There's a lot of first-time fund managers and people interested in VC, so it will be good to offer both perspective. The broad VC, but also fundraising and the processes as you set up your fund. My name is Abdulrahman Tarabzouni. I'm the COO of the Saudi Venture Capital and Private Equity Association. Very quickly, the association is an industry body that aims to develop and support the growth of the VC and PE ecosystem in Saudi. So if you're an investor or an organization that is interested in accessing or exploring or connecting with the Saudi VC and PE ecosystem, then the association is a stop you would probably want to make, and we'll be happy to help. I've got a panel of experts experts from the VC ecosystem across the globe. We've got Ravishankar, GV, MD of Sequoia Capital, one of the world's renowned VC firms in the past 30 years. Abdulrahman Tarabzouni, CEO of STV, the MENA region's largest VC fund. Nosaibah, Alrajhi, founder and CEO of Forus Financial. Yuan, managing partner of Rockets Capital, a leading Chinese venture capital firm. Jonathan Medved, founder and CEO of OurCrowd, a leading VC investment platform. And last but not least, we have Evans, the managing partner, joining us this morning. So, without further ado, we have half an hour. We want to get as much from our panel as possible. GV, I want to start with you. Could you offer to the audience just a broad view on what the process of setting up a venture capital firm looks like, the fundraising, the journey, broadly speaking, as a long-time VC?
Is this better? Yeah, I'm likely it's better. Okay, first, great to be here, and thank you for the question. Sequoia has been there for 50 years, so this process has become somewhat muscle memory. And so when you ask me this question, I have to think about, okay, what really goes on in a fundraise process. But essentially, when a few people get together to say, hey, we want to start an investment business, they start by saying, look, I have an idea on how one can make better returns than the market. Because if you're going to come in and say, hey, I'm going to make some returns, which is like other people, nobody wants to encourage a new coming manager, right? So you got to come in with an angle that says, I can do better than what other people do. And usually that happens with an investment strategy, which also focuses on why you are best positioned to execute that strategy. So when we talk about investing in founders, we talk about founder market fit. And I do think there's something called an investor investing market fit, in that you say, hey, I come from this background, I've known, call it technology or AI for like last 10 years. I understand deeply that ecosystem, so I'm going to start an AI fund. Then you have some chance to say I'm differentiated from the Sequoias, the Axels, and others who are in the market already, right? So it starts by saying, what is your core strategy? And then, you go out and try and find the first believers. Usually it's people around you, right? People that have worked with you. You start with that core to say, hey, I've assembled a pool of capital that believes in me and my strategy. And then you take that to the wider set to say, now, can I find institutional investors who will back my strategy? And that process, unfortunately, is one of, just doing this consistently for a long period of time. You go knock on doors, meet them over and over again. Most people have some success when they've already built a pipeline of investments. So they take these companies and position them in front of the LPs to say, these are the kinds of companies I'll invest in. That demonstrates they have access, and they have the ability to convince founders to take their capital. So it's a little bit de-risked when you go with that portfolio to an investor. And so, you start with one believer, and then usually the LP community is actually a very tight-knit community. They speak to each other a lot. So if you find those specific key LPs, then other LPs start taking notice of you. So usually we've seen that to be the process for a first-time manager. Of course, it's different for funds that have been there repeatedly. It's a very different conversation there.
Amazing. Abdulrahman, you know, you have a good perspective on the VC ecosystem in the MENA region. You know, share with us, what do you see as kind of like the broad landscape overview about the MENA region? How does that look like?
So it's been a very exciting journey for us in the Middle East as venture capitalists. The ecosystem is very nascent. We just got started. It's been roughly 5 years, I'd say, since we really saw the tipping point of this industry, and it's been growing very exponentially ever since. So Saudi Arabia today is the fastest VC market in the Middle East. The amount of VC deployment across MENA is increasing at a very fast rate. You see FDI and global investors coming in like Sequoia and others. And it's been a very iterative journey for many of us in the ecosystem, because we're learning as we go. The founders are coming in at an increased pace. You have talent coming into the region as well and taking part of the build-up story of the venture tech ecosystem. So all of this has been happening at once, and it's been exhilarating, to say the least, to be part of such a huge movement. And add on top of this the fact that the macro environment is changing very rapidly, and you have this deglobalization effect and balkanization effect, where a lot of these regions and economies and countries are trying to localize their talent, their data supplies, their technologies. So it's creating a multiplier effect on how quickly indigenous players and indigenous capital is fueling value creation in your own local economies. I guess we can't also, let's say, disconnect ourselves from what's happening globally. Today, it's a very challenging time. So the macro has changed significantly. There has been a reset on where value is and what value looks like and what is backable with venture capital and what's not. And I think it's been healthy, to be honest. And even healthier for us in the Middle East, because this is all coming at a time when the industry is about to take off, and this kind of discipline is coming in at a time to, set the tone for the next few years. Profitability matters. Founders need to be disciplined. Investors need to be disciplined. LPs need to know what they're looking for. They need to understand the long-term cyclic nature of this asset class. And all of this is net positive, I would say. And at the end of the day, I guess we keep reminding ourselves, especially as MENA venture capitalists, that the most exciting part of our job is, aside from generating returns and be financially responsible to our LPs, is venture capital in the Middle East is probably one of the most exciting spaces to diversify the economy as well, to create jobs, to push this top-down innovation agenda that a lot of our leaderships and countries have been trying to enact in our part of the world. So it has this double effect of not only creating a healthier, growing economy, but also a more robust, innovative, diversified economic base that can create a lot of value and wealth for its own people.
Amazing. And a quick follow-up, and I'll get next to Bing. So what STV has been in the market since 2018-17, leading the market essentially. So given those changes, what adaptations have you made to your investment thesis, strategy? What optimization have you done along the way?
It's a good question. I guess at the end of the day, we're capital allocators, and we keep saying internally to ourselves as a team that we're in the business of allocating capital to people who are gonna. So essentially, think of the world of a bunch of parallel universes that can emerge, and we juxtapose this on top of the Middle East, and we keep thinking, how will a better, more economically stronger Middle East look like? What are the sectors? Where is growth? And then we map those different parallel universes, and we think of founders that can come and go and create value. And I guess our job as capital allocators is to allocate capital to these different sets of potential futures that the Middle East can look like. So in this challenging time, we took a step back and just redid our model. We thought of, how value chains are being disrupted, whereas new forms of value coming in. And I guess we are going back to basics. We're going back to thinking of top-down industries. Education is still broken. We need to fix that. Healthcare is still broken. We need to fix that. Property and real estate, prop tech, one of the biggest economic levers in this part of the world. Very little exposure to prop tech. We need to fix that. So we go back to basics. We go back to where money is flowing, to where demand is residing, and we try to make very concrete bets and just find that parallel universe in which MENA is going to generate value backed by a great founder.
Amazing, interesting. So, being Rocket's Capital has had a successful first closing, I believe, this year. It's interesting, coinciding with just the general challenging fundraising environment. What was that journey, like for you guys, and what was the success factor? It seemed to not have an effect on Rocket's Capital.
Well, thanks. First of all, thanks to FIF for having me here. It's my first time in Saudi Arabia. I love every minute of it. I think the title is, VC fundraising in challenging times. In China, we have a saying that this year is the most challenging of the past 10 years, but it's the least challenging for the future 10 years. So that was true for the year before last, that was true for last year, and certainly it's true for this year. I'm pretty sure it's going to be true for next year as well. So things are definitely not looking better. So we are not waiting around for good times to come back or for the easy time to come back. So to start a new fund in this challenging environment, I think you need to be different. I have been in China's VC and PE market for over 12 years. So when I came out to start my own fund, I can't just rely on my past track record, or I have more brilliant ideas than others. So I've been thinking for the past few years, I think to start something new, you need to be different, and you need to have unique propositions for your LPs as well for your future portfolio companies. So what I did, I've been thinking is we need to combine financial capital with industrial resources. So that's what I did. And also I think we need to identify a sector that will have proven growth in the future. So that's why our fund is focused on the EV value chain in China, on electric vehicles, and also our anchor investor is XPeng, which is one of the leading pure EV players in China. So XPeng putting $150 million into our fund. Not only, in addition to capital, they're providing deal sourcing as well as empowerment after portfolio investments. So I think that's why we're so lucky so far in terms, we have a $500 million targeted fund. We have raised 250 so far, so we're halfway there. So we're very excited about the prospect of EV, not only in China, but also globally. So on this trip, I realized that I think Middle East will be a ripe ground for EV development. I think Lucid is here. I think with Lucid opening a big factory, I think all the supply chain will be moving here as well. So I think the fact that China is the largest EV market, we have a very developed supply chain market. How can we potentially bring that over to Middle East, to Saudi, to the kingdom? I think this is something we're very excited about. And then with this fabulous conference, I hope to meet many friends and potential partners.
Hopefully. Evans, Wadson Ventures, Kenyan-based venture studio and VC. How did you see the growth of the VC market in your region? What did you feel were like the first movers to deploy capital, and how did that evolve over time?
Thank you. Basically Africa is still at a very infant stage when it comes to VC, but it has over 1 billion people, the fastest growing middle class. And at that infancy stage, most of the venture capital that has come into the African market is driven by a few risk takers coming from, Silicon Valley and a few other European markets who take a leap of faith, but it's very, very minimal. So the capital deployment is still at very low compared to all other regions in the world. And that presents an opportunity, but also a challenge. A challenge because there's lack of trust and traction. And so what is happening is in one particular sector, when certain VCs jump into it, then all other VCs jump into that particular sector, and it leaves all other sectors that have massive potential without enough capital. So that is what's happening. And what is going to happen in moving forward is that we are trying to change that narrative by encouraging more locally based, locally founded venture capital to raise capital locally. There's a lot of capital within, because you'll find even pension funds and all such investing majorly in bonds, not allocating any percentage of the investment into VC. It's just because that's how they used to be for a very long time, and they've never seen anybody leading the way. So we're trying to change that narrative, and it's going to continue changing over time. And the effect of that is that we'll diversify the sectors. Right now, there's a lot of capital going into fintech, for instance, within Africa. Probably the largest deployment of capital in the world in fintech is in Africa right now. But there are so many other sectors because of the fastest growing middle class. People want to be able to consume content. People want to be able to, have better housing, better healthcare, better education. So all these presents opportunities for new funding and even VCs that are operating in other markets to explore the African market. So that's what I would like to encourage VCs that are operating in other markets to explore the African market, but more importantly, to look at how can they be able to partner with VCs that are operating in Africa to understand other sectors which they don't have expertise in, because that is what's preventing them from venturing into other sectors.
Interesting. Jonathan, you were one of those who've had pretty long and I would say successful fundraising experience. You've started with OurCrowd, 2012 or 13. So you've caught the growth years after the 2008 recession, but then you saw the peak, the pre-pandemic, pandemic, and now in 2022. What was that experience like? What have you seen as commonality, and what's new this year?
It's been a wonderful ride, and what I think people often forget, who aren't deeply into the asset class, is that our time span is different, right? People outside this room are mostly thinking about this quarter, next quarter, maybe next year. We're thinking on a decade-long time span, right? And I think, by the way, congratulations to FII for putting this group together, because you're looking around this little circle, and the globalization of venture is apparent. You've got people from China and Africa and India, and and of course the region here. It's remarkable. That's growing. It's no longer just a Silicon Valley story, number one. Number two, the democratization of access to the asset class, I think, is a trend that we bet on at OurCrowd 10 years ago, and no one knew what the hell we were talking about, right? In other words, you're going to go to regular people, just even your wealthy dentist, your lawyer, or your family office, who know nothing, who don't even speak the language, right, of term sheets and preferred stock and liquidation preference and whatnot, and you're going to bring them into the asset class. So that now has gone from esoteric to the hottest thing going on. I mean, literally every day there's another announcement about another platform. because people have finally woken up and realized there's $90 trillion in individual investor hands, and it would like very much to join this asset class. I think there's also what's happening now is the need to really not just invest in more of the same, but to break new ground into new technology areas, the way that Abdulrahman was speaking about, which is we need deep tech investment deeply and immediately, especially to handle all of this impact and change. If you expect that the bankers, who I very much respect, who were in the opening platform to provide the solutions here, I'm sorry, it's not going to happen. It's going to happen with this group here. We are going to pioneer the energy transition. We're going to figure out food security. We're going to bring space into the picture. We're going to finish the electrification and the property tech revolution and all of this. And we have just got started. So while I've been at this for 10 years and we're now managing about $2 billion of this democratized venture capital, and we have 220,000 members on our platform, and we're opening offices in the region. We've opened already in Abu Dhabi, and inshallah, we hope to be a part of this. We're, proudly from a little country just down the road called Israel, and we're a global platform who believe very much in what's changing now in the region, and excited. And I think that while it's challenging times, it's also the best of times.
Well, and congratulations on the incredible journey for OurCrowd. And to your point, it was in 2019 that the first time the VC deployed outside the U.S. was more than was deployed inside the U.S. It's always been, or it had always been, predominantly U.S.-focused arena. So, Nosaibah, you're one with an interesting background. You kind of have like one foot as a VC or as an investor, but the other foot as sort of like a founder or operator. What was that journey for you? What have you seen as common themes or questions to be answered, and what do you see as unique on both sides?
Well, thank you, Abdulrahman. I think, yes, I've had my foot both in the sell side and the buy side, and I think everyone has spoken about the buy side, but let me talk about the other side. So 2021 was a very exciting year for VC, especially here in the region, and everyone was very zealous to kind of jump in and be a part of the game, and there was kind of a race who had the biggest round. And I think the most common misconception is that having the biggest round, you haven't necessarily won. And I think founders, later on kind of discovered that, hold on, there was a term sheet I didn't understand. There was liquidation preference I didn't understand. There was a dilution that I wasn't aware of. So I think we need to kind of take a step back and look at what is the value of VC and what is the value of the partnership between a VC and a founder. Because in the end, our goal is kind of in parallel, and we want to innovate, and we want to change, and we want to dig deep and create a more decentralized markets globally. In terms of, then looking at the VC world, I think that VC brings more value than just cash. I think, aligning our goals and understanding how we can work together within the next 5 to 10 years, looking at a VC's portfolio and seeing what portfolio company can I work with, what portfolio company can I partner with, because VCs love to make introductions, they love to see their portfolios grow. I think that's a very critical aspect of that. Raise when you don't need to raise, you have some leverage, but also don't raise too much, because that's also kind of digging yourself into a hole. Having very clear, milestones. Where do you want to go next? What's your vision? Many times founders fall into just focusing on their local market. Think globally. Think about beyond your borders. That's where you want to be. You want to innovate with people outside your borders. That's very critical. So I think there's a lot of lessons to be learned there. Another perspective from the other side is that oftentimes founders are very overwhelmed with the next milestone. And I think especially where I come from a very regulated industry, the financial industry. You need to really be well-versed in the business side, but also the regulatory side, and really understand how to navigate governance, how to navigate risk. You know, not only just focusing on technology. Technology is great, innovation is very important, but also governance, risk, the financial side, and the buy side is very important.
Interesting. So, GV, to Nosaibah's point, you know, a lot of VC, and after this, I'll just go quickly into like one final advice you want to give to founders as they approach you guys and approach other VCs. But to her point, founders usually demand strategic value from investors or from VC more than just the capital. And by the same token, I imagine the VCs would require from their LPs more value than just the capital. You know, what are some of the things that you hope the LPs would bring to you guys as a firm, but also to your portfolio companies?
Yeah, let me start with patience as the one thing that LPs can have more of. And you know, that's reflecting in how we have started thinking about fund structures as well. Last year in the US, we moved to this notion of permanent capital where we said, look, we don't want the 10+2 structures. And sometimes it's restrictive because with the very best founders, you want to be there from idea stage all the way to IPO and beyond. And that's really what our aspiration is, to kind of be very long-term partners. So when we tell our founders think long-term, it's hard to then operate from a 10-year view, right? We have to then have structures that equip us to actually think long-term. Otherwise, you're sitting there thinking, okay, you know, why don't you go public now? And deep inside, you may know that may not be the right thing for the company, but you are thinking about your fund life and then how you have to return your capital and so on. So we really, as much as possible, want to be like 100% aligned with how the founder should build their business. So the notion of permanent capital is an example of what kind of support LPs can give funds. And if we figure out a way for them to keep getting liquidity, which is obviously important from their perspective, we feel that's something that's important. I'd say, you know, while the notion of value addition from VCs towards companies is now well understood, capital otherwise is a commodity. With LPs, I don't think it's still there where people are saying, okay, this is how I'm going to help you. You usually find that with regional capital or sovereign funds and so on, who can help you with respect to kind of navigating a certain geography, etc. Those kinds of supports are possible. But if you're an LP, if you're an endowment sitting in the US, you can't really do a whole lot, to help. Especially if I'm investing in India and you're sitting in the US, it's not like you're going to be able to help. You know, again, our general request to LPs has been just, you know, allow us the time to demonstrate what we need to demonstrate, because that's what it takes, especially in emerging markets where the friction is high, the infrastructure is poor. So a lot of things need to be built from, you know, grounds up, right? Like if you were to build an e-commerce company in India, which Flipkart did, or even in this region, I would argue, you have to build a whole lot of things yourselves because they just don't exist for you to build on top of, which is there in the US because it's been a developed economy for a long period of time. So I think patience is probably number one.
That's a really good takeaway. Unfortunately, our time is up. This is how, you know, quick and fun when you hear from the experts. We appreciate you guys coming, and we encourage you to, you know, essentially mingle with the VCs on this panel, but also in the broad conference. So thank you so much, everyone.